Well, good afternoon, everyone. Maybe still morning for some, but anyway, we of course had the old Fed come out yesterday and blab a little bit. They kind of shut the market up, as you can see. This is an S&P chart you're looking at here. And back yesterday, they kind of shot things up. Um, and then, of course, overnight last night, this is actually from, well, let me a little pin out here. From this bar right here up through this time period. This is your Asian markets. And this is when Europe opened up last night. And they had an interest rate decision and they left things alone, but they were, complaining about tariffs and inflation. And so they sold things off. Of course, we got here to the market today. We took it right back to where they were last night. And then they've decided to kind of pull things back a little bit. So just kind of some ups and downs and ups and downs and ups and downs. But if you kind of look at this little level right down in here, which is basically where we were back over in here, that's basically where they announced our interest rate decision, and they haven't really taken that out yet. So until they do, things are, I'll say, more positive based off of yesterday than not, but they're not a whole lot more positive. So, but I think going forward here, I think Powell's still worried about us having inflation because of tariffs and things like that, and maybe so, maybe not. I don't know. Trump has had a tendency of throwing tariffs on and then yanking them off. Which, speaking of that, um, let's do this. There we go. I'll go over here to a swing chart on this one. This is good old copper. Speaking of tariffs, and I'll kind of explain that to you here real quickly. Um, so copper's been having a really, really nice rise here. And it came right up to that 515, which is basically the high from last year. And then it kind of pulled things back off of that with China weakening up and everything like that. What's happening right now, which is kind of interesting, if you kind of think about what tariffs are, of course, they're like taxes coming in, right? But since we're going to be putting tariffs on here in about what, week and a half, 2 weeks, something like that, what countries are doing is they're importing a ton of just tons of copper into the United States right now. Which you think, well, okay, then we're going to have a huge supply. Well, yeah, the problem with that though is everybody else is not getting the supply. Everybody's importing into the United States and not delivering anywhere else because they want to get everything in here before the tariffs hit. And so you got a shortage of copper globally, if you will, but not here in the United States because everybody's shipping it here before all the tariffs come in. So it's kind of a weird deal. But it's kind of shot the copper market up. They kind of base everything off the copper market based off of the London International Futures Exchange, the FTSE, or the London International Financial Futures Exchange. But anyway, with that, we've got copper kind of pushing up a little bit. So that's the interesting thing that's going on here. And one thing I'm kind of waiting for is for copper to really break out above that 515. And if it does, we'll probably see another leg up in copper. I mean, I've been kind of expecting it to at least kind of go up and test its highs. And the only reason for that is because of good old gold, which is breaking out. You can kind of see here they had a lot of resistance at this 3,000 level, kind of yanked it back, and now we've broken above 3,000, and here we are. So we've had a nice little. This is actually the, well, here let me put it this way, slash GC. This is the current contract. I actually had the June contract in there, but kind of the same thing. You got resistance here, pulled back, and now they're kind of shot back up. This contract's going away next week. We'll hit first notice date next week, and so I was already looking at the June contract. But anyway, we're gotten back above. We're above 3,000 now, and as long as we stay above 3,000, we're rather stronger rather than weaker. But that's kind of been helping pull up silver. And silver's actually been the weak one coming into all this. And we've taken advantage of these. I mean, I don't know if you all are in the my gold stream or my perfect gold trade programs, but we've been kind of hitting it pretty hot and heavy, and actually 13 for 13 in the gold stream. So if you're interested in that, you can kind of go to that, prosperitypub.com/Geof Smith, whatever, and just kind of check that out. But anyway, I think silver has kind of been lagging back a little bit. And if you look at silver here, SIK, oop, that's last year's. Duh. My brain still does 24 every now and then. You think I'd get over that after 3 months. Um, and you can kind of see it's been going up, but it doesn't have that strong move that you see in copper and gold. And I think the main reason behind that is really, silver, even though it's the poor man's gold, if you will. But we also have it as an industrial metal, a lot like copper. Copper is definitely an industrial metal. Of course, they're mined totally different and all that stuff. But anyway, silver just hadn't had the oomph to get up there. It went up and touched $35, as you can see, and I was hoping it would get above 35, just like getting above 515 in copper. I was hoping that silver would bust up above that and really kind of take off a little bit. If copper can, and just because it's kind of stronger of the group here, um, HG. There we go. If I can't even type HG. There we go. But if we can get above this 515 area, there we go, and close above that for a couple of days, on the cheaper side of things, you can probably go out and buy COPX. It's COPX, kind of like ConocoPhillips with an X on this end of it. COPX, here it is. It's a fairly cheap stock, and you can kind of see it's been shooting up here with copper. But this is basically your copper ETF. So if it can get above that 515 in copper, I think and close above there a couple of days, we can probably get into just an outright call in COPX or something like that, and just see what it does. But I'd kind of go out a ways on it. The options are fairly cheap. You can probably get in an at the money call that's 3 months out for like $1.60, $1.70, something like that. Who knows? So, but but you could do that, or you could just buy the 100 shares of the stock. It's $4,200, and on a margin account, it'd be what, 2,100. So not that much to tie up. But I think it'll continue to move up along with copper, since it's the copper ETF, and kind of go from there. But like I said, I'd like to have copper above 515 and close above it before just kind of jumping in on it. Now, if you want to cheat a little bit and argue, hey, it's going to go up anyway, I mean, you can go ahead and jump in, but I think it'd be better if we got above that 515 and kind of stayed there for a couple of days before doing so. But with the tariffs coming in and everything like that, like I said, on Tuesday, I'm kind of anxious to see what the markets do on April 2nd. All right. Because that's when the official date of tariffs are going in, and now we get to see what it actually will do. So, and that's kind of what I'm kind of waiting for. And I think the S&P, Dow, NASDAQ, all those, yeah, that's them too, are kind of waiting for that. I mean, we've sold off here, and they've kind of bounced things up a little bit. I mean, here's your lows, here we are, and this is where we came from. So everybody says, hey, man, we had a great up day yesterday. Well, yeah, in the bigger picture, we're kind of stuck in here, and really can't get to moving out of it. We won't take out the 56.50, and we're having a hard time getting above 57.70. There it is. And until we get one way or the other here, we're kind of paddling, in circles. So, and it's just going to churn and burn and everything like that. I mean, this is one of those markets that it's great to sell, put spreads or call spreads in just because the premium just collapses out and there it is. So, but until they start to move, we don't really know what they're going to do. And they might flat out keep the market just like this until we get to April 2nd, just so they can figure it out. Well, what's it really going to do? My guess is because, oh my goodness, the market's going to get so surprised when we put tariffs on everybody on the 2nd. They'll probably sell it off on that day. Um, just because, oh my goodness, tariffs are finally here. It wouldn't surprise me if that doesn't happen. Um, so just beware of that. Now, if they don't, okay, fine. Heck, if they have a huge rally on that day, they might just say, finally, they're here. We don't have to worry about it anymore. Who knows? So it's going to be kind of a weird day on the 2nd on April. In fact, I assume that's a Monday. I haven't even looked. No, it's a Wednesday. Yeah, alrighty. So the first is on Tuesday and the second's on Wednesday. Wonder why they just decided on the 2nd because it's not April Fool's Day or something. I don't know. But anyway, I think until we get out of this little noise zone here, we really don't know which direction the market's going to go. And if they start taking out these little lows down here, I guess we go back down and retest the year low. If we take out the highs, then we got some room to move, and see if they can get back up to 6,000 maybe. So, okay. So they don't want to do it on April Fool's Day, huh? But anyway, it's to kind of fool everybody. But that's the one thing I'm kind of waiting for is A, for the S&P to find out what direction it wants to go, and B, copper can close above that 515. I think we're going to see some more upside. And of course, being the last week, isn't it? Am I wrong? What is today? Oh, we're in March. Yeah, next week's basically the last week. We have one extra day on Monday of the next week. But next week we'll probably get our PCEs and our GDPs and stuff like that. And this GDP is going to be quote unquote, the final for Q4 before we get into next month in April and get the first look at first quarter GDP for this year. So whatever GDP number comes out, it's just a revision of the revision of the revision. Ta-da. And so once they get that out of the way, we'll get to see what the first quarter is next month. Of course, we get toward the end of the next month. And of course, the PCE is, personal income and spending basically. And so they want to see what people are saving, what they're spending, and based off retail sales has kind of slowed down a little bit. So spending might be a little bit less. But I even noticed that a lot of places are putting things on sale. I saw, what was it? Domino's Pizza, get any pizza 50% off. So any size, any kind, 50% off. So, which is pretty cool going into, I guess, March Madness or whatever it is. But anyway, just kind of keep your eyes on what the S&P is doing. If it's just chewing around, let it chew around. Don't let your money get chewed around. And as long as gold stays above 3,000, I think it's still a whole lot more positive. Of course, copper can get above that 515. I'd really love silver above 35 bucks. And we can get kind of a renewed rise throughout the metals and everything like that. So, but anyway, that's kind of where we are right now. And if if you do have any questions, let me know. Otherwise, we'll come in next Tuesday, kind of see where things go, and kind of go from there. We still have quite a few earnings coming out. If you just kind of look at tonight, I mean, we've got Nike and Micron and Federal Express and Lennar. That's just coming out tonight. So we'll see if the market likes them or not going into tomorrow morning, right? And even next week, we have quite a few out there. We got KB Homes and McCormick, Worthington, Dollar Tree, Cintas, Paychex. So quite a few of them yet. So, but anyway, but with that, if you don't have any questions, cool. We'll come back in on Tuesday of next week, find out where the markets are, see how earnings are doing. They've been kind of earnings have been kind of getting beat up. Some of them kind of rally up, but for the most part, even though they've come out with actually decent earnings, they've been kind of beating things up a little bit. And I think the main purpose of that is you're probably been seeing a little bit of like a sector rotation, if you will. I guess that's the way that the verbiage is. But people are kind of getting out of the techie guys and stuff like that and getting into more consumer staples and stuff like that. And you've been kind of seeing some of those stocks moving up and those other stocks kind of moving down. And regardless of what their earnings are doing, and they've just been kind of saying, okay, earnings are out, let's just dump it, we'll go somewhere else. So it's kind of like the sentiment out there. So, uh, well, thank you, Barry. I appreciate that. But, um, but anyhow, uh, thank you all for tuning in, and you all be safe and stay warm. And apparently, Minnesota is just like summertime right now. So y'all stay that way. So, but I appreciate it, and y'all take care, and we will see where we are on Tuesday next week.